Hello guys, welcome to the King's Kid YouTube channel once more. So today, as promised, we're gonna be having a very short video that briefly explains how I tend to merge range with what open high low close and open low high close sequence, right? So I'm going to be explaining this in today's YouTube video, right? And I do hope you found value. I want to apologize for the delay, right? Because we've been very busy, so it's not deliberate, it's not intentional. The YouTube people and the YouTube family were not forgotten, right? But however, you have to pardon the delay because of activities, right? Activities, as the case may be. So I'm going to explain this concept that I use particularly, and I'm going to explain why I use it, and I'm going to explain how I use it. I might not be very blunt in all my explanation because some information are rightly reserved for what the inner circles, and you will not blame me for that, right? You will not blame me for that. So but I'm going to do my best to give out value and trust that this video is going to help shift your trading gear into the next level. And so all you have to do is simple. Please pay attention, pay maximum attention to every single details I'm going to say. And number two, I need you to watch the video at least 2 times, so that it will have the ability to properly sink inside of you. So you need to watch the video at least twice. The first time you might get a little observation, but the second time you might get the key observation. So hence the reason I'm admonishing that you watch the video 2 times, right? And thank you for the 1.9k subscribers. You guys are amazing. We come this far from 200 subscribers all the way to 1.9k subscribers, and we're heading to 2,000 subscribers. And last but not the least, please share the video, share the content. Feel free to save it, feel free to comment, and feel free to do whatever you want to do with the video. Now let's dive into today's topic and today's class. Now in my previous videos, I've taught you people how to trade C3, and yeah, I didn't just teach you people how to trade C3. I taught you people the step-by-step guide on how to trade C3 using what the open high low close and what's the open low high close. Now the open high low close is what for a bearish C3, right? A bearish C3. Then the open low high close is for what? A bullish C3. So I'm showing you because a lot of you have issues where you are trying to catch your model 1. You have a lot of issues when you're trying to catch your model 1. Then you get wicked out before the market does what? Rallies, right? So I showed you how to be able to catch C3 perfectly. Romeo did not teach you this stuff. Yeah, he did not. What your mentor Burst did to you is give you a blueprint. He gave you a template of how to go about understanding the methodology of CRT trading, right? But I'm giving you a step-by-step hint of how I trade it, and this has helped a lot of people, tons of people. I can't begin to count the amount of messages in my DMs that this simple methodology has helped, and I'm going to explain it right here before I delve into the real source of the day. Now if you have a CRT or a range right about here, right, then you are expecting C3 to form here. Now this is where it gets saucy. You're expecting C3 to form here so that it can come and do what? Take out this target, which is the CRT low or the range low. Now most of you just beautifully wait for markets to open, then tap into your model 1, which is definitely going to be an order block coming from the left hand side. Then that was it. You just click your buy and you expect the market to do what? Tank, which in most cases few people are doing it blindly. Now I need you to understand that every single thing in this market is paired with time. every single candle, every single price movement, every volume movement, every non-volume movement is paired with time. Time is the key factor that brings about the validity of your entry. If time is not paired with your entry is as useless as it is, right? Now, what went wrong in scenarios whereby you are trying to catch C3, right about you are trying to catch C3, then suddenly market wakes you out or to soups you out before delivering into the target. What went wrong? Time went wrong, right? But I'm not all about time in this topic. I just want to show you how to catch C3 in the most meekest way possible. I'm trying to teach you how to catch C3 with least amount of what pressure, having no fear that market is going to deliver into your target. I need you to know that the candle is going to first open. I said it in my previous tweet that the opening price of a candle is greater than the highs and the lows, and this can be argued. I don't care, but it's the truth. This is my reality. The opening price of the candle is more important than the highs and the lows. The highs and the lows are formed at key time, right? But the opening price of the candle is the determinant of where the action is going to be heading into us to. So basically, if you want to trade C3, or how you trade C3 is you wait for the market to open. Once the market open, I need you to mark out the opening price, identify it, mark out the opening price, and allow the wick to form. The wick is eventually going to trade like this, form all the way into the model 1, right? Allow the wick to form. Now, most of you are scared trading the model 1. Most of you are very, very not confident trading the model 1 because some people have gotten a lot of complaint like that. Some people say, okay, the market tend to wick them out before it goes there, etc. and etc. So I'm giving you a more confident way to trade model 1, or a confident way to trade C3 rather, not model 1, right? Mark out the opening price. This is the opening price. Let me change this color. This is the opening price. Allow the market to bridge it. Let the wick form. I hope you know right about here is the wick. So let the wick form, and the moment the wick is done forming and bridges below the opening price, the moment it bridges below the opening price, you have a CSD confirmed. You have a shift in state in delivery that is confirmed. You can now start looking towards make your entry decision after the CSD has been done. It's as simple as ABCD. This is very simple. I've shown you guys how to trade this. I've dropped tons of video on my Telegram. And by the way, please, if you're not on my Telegram, you need to join, because there's a whole lot of video on my Telegram that my YouTube and my Twitter does not have access to. Right? So you trade from where? The CSD. Where do you put your stop loss when you trade from the CSD? The breaker. Right? The breaker right here. That's where you put your stop loss. And your entry is around the CSD. And you will watch price never disrespect it. I'm telling you, price will not disrespect it. It will go straight into your target. This is one paramount important way I tend to do what? Trade C3. Yes, when I feel like the market is messy, I'm not confident in taking the entry from model 1, right? I simply wait for this opening price or C3 makes it high. Now, whatever C3 is making from this region is the wick of the candle. Make all the whole nonsense it wants to do, it should do it. Then the moment it goes down here and bridges, I have a CSD. This is where I'm looking to trade from until what? CRT low. Until CRT low target is hit. You will not go wrong trading this. You will not. So this is the example I meant. Now this is XAUSD. I wanted to use GBPUSD, but why not I use the pair I'm very, very familiar trading with recently. So this gold, and let's say this is CRT that we all found around here. Right? So how do you trade this C3? The example I just mentioned right about now. Let's put it into the test. So this is C3 right here. Okay, so let's go to lower time frame and trade C3. Now remember, I told you something. If you are trading a daily candle, you are looking for your CSD in 1 hour time frame. Don't forget, if you are trading the 4 hours, you are looking for your CSD in 15 minutes time frame, etc. and etc. If you are trading the weekly, you are looking for your CSD in the 4 hours time frame. Now it's very subjective. Entry is very subjective, but until your footings is grounded, please keep using this time frame sequence. Right? So now let's look into this. Now let's go to the 1 hour time frame and see how we're able to do this. Now this trade, I took this trade particularly, right? I took this trade myself. Yeah, I took this particular trade. Now pay attention. Now C3 opened here. This was the opening price of C3. C3 opened right here. That was the opening price. Please pay attention. Pay maximum attention. Right? And the moment C3 opened here, look at the first thing it did. It went to create the wick of the day. And remember, look at the size of the wick. Look at the size of the wick. So remember that short wick supports expansion. Don't forget, if the wick is short, it does what? It supports expansion. That means that candle might experience a potential expansion. But if the wick is long, it's only supporting what? A reversal. And reversals, you can choose to catch reversals or rather catch the continuations, however the case may be. Right? So in this scenario, gold came to form the wick of the day to fulfill the CRT. Now this is a range. This is what you will trade. Pay attention. The average range trader, the average pattern CRT trader, whatever have you, whatever the case may be, they're going to put their stop loss right about here, if I'm not mistaken. If they're going to put your stop loss, excuse me, they're going to put their stop loss right about here. And look at this, just 1 to 3. I don't want to stress my hard end analysis to just catch just 1 to 3. I want to have a very precise entry so that I can limit my stop loss and have more accurate risk to reward. Now all this place is your model 1. All this place right here is your model 1. So you want to cover your model 1 perfectly. And you're not wrong if you do this, right? Now, I'm showing you a more excellent way to do this. I'm showing you a very much excellent way to do this. C3 opens. The moment C3 opens, the first thing it does, because this is a bearish range and it needs to do what? Expand bearishly. It needs to expand to the bearish direction, right? The first thing I want to see, because pay attention please, I want to see the market open, then make a high. If this bearish range opens and makes a low, this CRT is invalid. You need to pay attention to how the price open. These are the little details you don't pay attention to. Then some people parade themselves to insult other people and say, okay, your concept does not work, your methodology does not work, you teach rubbish, etc. and etc. This can be avoided. If it opens high, if it opens low like this, remember we're expecting what? A bearish expansion to these targets. If it opens and instantly the first thing it does was to make a low, this is already a red flag. This is the market telling you, hey bro, pack out. I'm not ready to expand to the lower. I'm not ready to expand to the lower side. But if it opens and makes a high first, this is the checklist. It's like a checklist. Finally, that means what? This range has what? A potency, the potential to finally drop. Then you now measure the size of the wick. Now this particular pullback or this particular high that the market made is very short. So hence we have a very, very short wick. And it does what? It does support what? An expansion. So all I needed to do was to wait for what? This opening price to be breached. That's all. So that I can perfectly trade my CRT accurately, I needed the opening price to be breached. That is all I needed. Let the opening price be breached. That's all. Let it just be breached. And was it breached? Yes, of course it was breached. The moment it was breached, what was the next thing I'm looking for? CRT low, previous liquidities, right? So this is the first immediate drawing liquidity. This is the second immediate drawing liquidity, right? Then this is the final target, right about here. Are you seeing? And that was how I was able to take. Oh, and listen guys, please pay attention. Are you seeing this opening price breaching? Notice how the candle closed below the opening price with a thick volume. If it's closed with a wick, please avoid it. It needs to close with what? A thick candle, a thick Marabuzo candle. If peradventure this candle that's closed right here, if peradventure this candle did not close as a full body candle closure, this candle, if it didn't close full like this below the opening price, I will not take it. I need a CSD to confirm it. It's non-negotiable. I need a CSD to confirm it. And the moment the CSD was confirmed, that was it. I took my entry and I held all the way. I think this was about 11 hour, if I'm not mistaken. So I held all the way towards to the low, to this first low. So yeah, it was around 11 hour. Then the moment I just TP'd here and I ignored this, right? So this was why I TP'd that. So I want you to understand that the wick is the noise. The real deal is the opening price. And this is how you trade it. You must first have a confirmed CSD. The candle must close below the opening price for you to start making an attempt. That's one. Two, you must understand, if you are looking for a bearish expansion, let the market open and make a high first. If it opens and make a low, that it becomes a low probability. In fact, I will not even advise you take it. This is just the few laws I look at when I'm trading what C3, as the case may be, right? So let's delve into the main topic for this video, which is actually trading the open high low close and the open low high close. Now this logic is a logic that gradually has begun to get popularized because of the way I tend to trade them. So sometimes you see me trading the 1 hour candle, a single 1 hour candle. Sometimes you see me trading a single 4 hours candle. Sometimes you see me trading a single daily candle. Now it's not a new logic as per se. It's a logic that has been there, but I have tend to bring a very, very nice smooth trading approach to this logic that makes it very, very easy. You can use it for your scalping, right? You can use it for day trading. You can use it for whatsoever. It perfectly fits the kind of trader you intend to be or you want to be. So please pay close attention to this particular section of the video. Pay very maximum attention because I might not give you word for word how I tend to approach these things, because some informations pardon to say are exclusive for private students. And yes, of course, but I'm gonna do my best to give you a run breakdown, a step-by-step guide on how I tend to trade it and why I trade it and how I look to trade it. Now pay attention. Now the first thing I need you to understand when trading this particular stuff is what the phase of price. Now what is price doing? What is the phase of price? Now we have an accumulation, we have manipulation, and we have distribution. I don't want to trade open low high close and open high low close in an accumulation phase. I don't want to trade it in a manipulation phase. I only trade it in a distribution phase, which is what continuations. Now you need to be a bit advanced to be able to do what, start getting to trade it in these other two phases, right? These other two phases. But particularly, if you follow my word step by step, never trade a single open high low close or open low high close in this phase of price. Always trade it what, in a distribution phase of price. You always want to trade it in an expansion phase. There you are going to have more longer candle volumes. You're going to have candles running in volumes, right, than you have trading it what, in an accumulation phase or a manipulation phase. So you need to understand the phase of price. You always want to trade it at an expansion phase of price. If you're not trading it at an expansion phase of price, you are wrong. You get kicked out, you get messed up, you get destroyed. Your account will suffer a bit of it. So you want to be trading it at a distribution phase of price. The second thing I want you to also grasp out of this is that you can trade any time frame, like every single time frame, right? You can trade it. But particularly for me, I like to use a time frame that is what, less perceptive to what, market manipulation, right? Perceptive to what, instability. Now I want to trade it on 1 hour time frame. I want to be trading it on 4 hours time frame. Then I want to be trading it on what, daily time frame. This is where I want to be trading a single open low high close, either the 1 hour time frame, either the 4 hours time frame, or the daily time frame. Now in some of my examples on my Telegram channel, you have seen me trade down to the 30 minutes time frame. You have seen me trade down to the 15 minutes time frame, and I will not advise it. Why? Because you need to get a certain level of experience before you can start to dealing with lower time frame, open low high close, and open high low close, as the case may be. Then the third thing you have to also pay attention to, aside the first one that I just listed, which is always trading an expansion phase, it always has to be what, in a continuation expansion. Number two, the time frames. You can trade on 1 hour, 4 hours, daily, as the case may be. Trade on time frame that are what, resistant, that they repels market manipulation, they repels what, instability, they repels uncertainty. Trade time frame that repels it. So like 4 hours time frame, daily time frame. You can trade down to weekly time frame of what, a single open low high close, down to the monthly time frame. Every single candle can be traded, right? Every single candle can be traded. You just need to understand the phase of the price. Then everything will eventually start making sense to you. The number three is that you need to understand the place of what, key levels. Key levels are very important. Now, the reason to understand the phase of key levels and the validity of key levels is so that you will not be trading a single what, open high low close, or a single open low high close blindly, right? So you not trade it blindly. If you do this, you get wrecked, you get destroyed, your account will suffer it. So you need to understand key levels, because every single candle that opens, the moment it opens, the next thing it's heading for to make is what, a wick. And that wick will potentially form what, around a key level. So you have something like this. Market opens, makes a high into what, a key level, comes back, gives you what, a CSD, and boom, closes. So it opens, right, makes a high, makes a low, and closes. This is open high low close. When we say open high low close of a single candle, this is what I'm talking about. It's a bearish formation, it's a bearish candle. It's the procedure to which a bearish candle forms, right? A bearish candle will start as a bullish candle, and a bullish candle will start what, as a bearish candle, right? Except for those candles that comes without wick, which also serve as what, good candles for what, liquidity, right? As draws in liquidity. Do you understand? So this is the perfect scenario of what, a bearish candle. And now this is the perfect scenario of what, a bullish candle. It opens, makes a low, makes a high, come back here and close. So this is a low, this is the high, this is the closing price, this is the opening price, and this is the CSD. This is what open, low, high, close. This concept is simple. This concept is easy. This concept is understandable. You can use it to follow up a trend. In case you missed the first entry, you missed the first model one, you can use it to follow up. Remember, the phase of price has to be in an expansion. So you will never see me trade this methodology when price is not expanding. Price needs to be in an expansion phase for me to be able to do what? Trade these single candles. It needs to be in an expansion phase. So these are the things you have to pay very, very maximum attention to. Then the key levels, obviously, is going to be your order blocks, your breaker blocks, and your potential fair value gaps, right? All these are your key levels. Now, the problem with all these key levels is that most of us tend to do what? Get familiar with it. Now, because we get familiar with it, we don't know when a key level is what's mitigated. We don't know when it's mitigated and when it's what? Unmitigated. Everybody's teaching key levels on X. Everybody's showing you key levels, but nobody's telling you, okay, this key level has the potential to fail. So how do you know key levels that have the potential to fail? They experience mitigation already. They already have 1 or 2, 3 mitigations, right? How do you know a key level that does not have the potential to fail? It's unmitigated. I told you in my Telegram channel, virgin key levels, right? I said virgin key levels equals what? Fast reaction. Equals fast reaction. The more virgin the key level is, the more fast price is going to smack it and react from it. I want to see such kind of stuff when trading my open low high close or open high low close sequence. I want to see those kinds of stuff. They are very important and they are what? Very, very what? Paramount. Right. So you have a candle range here. Let's say you have a candle range here, which I've already spoke with, for the market to open, make the low, come here, give you what? A CSD, retest the CSD, boom, expand, makes a high, then comes back to do what? Close. This can be very easy. It can be very simple. It can be very simple. Like, it can be this easy to trade. Open, that's the opening price. Allow the wick to form. The opening price is greater. The opening price is greater than what? Than the highs and lows. Is greater than them. So allow it to form, experience a shift in state and delivery, then trade all the way into the high. Then you can close. You can trade every single candle. As long as there's candle existing in the chart, you have trading opportunity. The only difference is this: you need to meet in with what? A few criteria, which I just listed. You need to trade what? In an expansion phase. You need to make sure price is within what? An expansion phase. So in that sequence, you want to be trading continuations, right? I can show you how to trade open high low close and open low high close for what? Reversals candle. But that's going to be very advanced. So price needs to be what? In an expansion phase, right? You can trade it what? You can trade on time frames of your choice. But like I recommend, H1, H4, daily. You can even trade down to weekly, down to monthly. It can be that simple. It can be that simple. You can trade down to monthly, down to weekly. Just make sure that the time frame you are doing is what? Repelling to what? To market manipulation and instability. So you don't want to trade all those stuff on 15 minutes, 5 minutes. That's a gambling behavior, right? Then the third phase is what? Understand the key level. Know the key level. Know the valid ones. Right? Know the valid ones. Now let's look at an example. Let's check this GBPUSD. Let's look at an example right here. Right? So this will be like the only example I'm going to share. Then we can come to the conclusion of today's section and segment. Right? Easy peasy. Now let's look at this monthly time frame. This is a monthly time frame. Pay attention. Let me show you something. You can as well take this thing as a signal, as the case may be. Now look at this. This is the opening price of this monthly candle right here. And what is the phase of this price? What is the direct phase of this current price movement? The direct phase of this current price movement is what is GU is what is an expansion phase. This is an expansion phase. This pair is currently what in an expansion phase, and we have a lot of draws of liquidity to clear. So this is an expansion phase, right? So good. Now let's say I want to trade open high low close or open low high close rather, or any of the methodology depending on the expansion phase which we have. We have a draw in liquidity right here. Remember, price will only expand to a draw in liquidity. It's expanding to hit a draw in liquidity. So we have a draw in liquidity right here, and I want to trade open low high close of the monthly candles up on the way to what this draw in liquidity is met. How do you do it? Now pay attention. Till it's met, how do you do it? First of all, this is the opening price right here. This monthly, this February opening price. That's the opening price of February. And yeah, now watch how February has gone what to make a low. Where is the low February made? It rebalanced the week of what? Of December. So closure above higher price, right? Don't forget, above higher price. So it rebalanced the week of December, but it's still trading what? Below the opening price. I don't want to. Now what this pair is doing around here is that all these stuff's happening right there is the wick that is forming. Every single thing happening right here is the wick, like what? That is forming and doing what's playing effects. So what do you want to do? You want to wait for the wick to form, allow the wick to form. If you want to trade the wick, good and fine, you can trade it from this key level, right? So this is the opening price and this is the key level. Price coming to do what? Rebalance the week of December candle, and this is a key level right here, right? So it came to rebalance it. So you have what? You have key level, check, right? And you have price currently doing what? Forming the wick. It's still forming the wick. Now, pending on how long this wick is actually looking like, or rather pending on how short, not long, short this week is looking like, we have what? A potential expansion. We seem to what? Might have a potential what? Expansion. So I will allow the wick to form. If I have more balls, which I often told you guys, if you feel like, okay, you have more confidence, do you understand? Are you seeing what I'm talking about? This is the key level. Are you seeing? Came to hit your breaker. It came to hit your breaker right about here, right? So we're having an expansion straight. Like I said, you can take this as a signal if you wish, but I'm giving you a direction, and you're going to see it happen. You're going to see it play out. We don't guess these things. You need to know that by now. We don't guess these things. It's only few CRT traders. I don't consider myself a CRT trader though, but it's only few CRT traders that get to call price for you before it happens. There's a reason they don't call price for you, but they just post you their after results. It's the lack of confidence in it. It's the lack of confidence in it. But I'm doing that here. I'm doing that in my Telegram. So all whatever that is happening here is actually the wick forming for the monthly what? Expansion. I'm showing you how to trade open low high close of a monthly candle. Remember, I went from monthly to 4 hours. Watch the time sequence. I'm moving from monthly to 4 hours. I'm moving from daily to 1 hour. I'm moving from 4 hours to 15 minutes. That's the time sequence. So I will only be interested in taking this pair once we have breached the opening price. Then I'm going to be looking for what? A potential range up on the way to what? This first target is met, because this is the first drawing liquidity is met. Then hold all the way to what? To this external drawing liquidity. This is how it's done. This is how it's done. This is how it's done. Easy peasy. Now, you can trade from the week if there is the presence of what? A valid key level. And this key level is very valid because it has not been mitigated. This is a breaker. This is a breaker right here. Very valid key level and has not been mitigated. So this is actually the week of the month. This is the week of the month right here. The market has given you already the week of the month. So this is low of the month. Literally, this is low of the month right here. Literally. So I don't anticipate or expect this market to come back again to this low of the month. I don't care what DXY is doing. I don't care what any other pair is doing. Do you understand? Is it making sense to you now? Are you seeing? So the moment it goes above the opening price, why not? I'm entering. Right about here, if I even see a continuation, which I'm already looking at this BPR. If I see a continuation around here, I might potentially take it all the way to the opening price. Then I know I've participated in catching the low of the month. Then I'm holding it all the way to this external drawing liquidities has been hit. The first one, which is around 1.9. You see GU trade at 1.39000. Then before it held all the way to 1.2500. 1.42500 per dollar. This is the methodology. This is the principle. This is the low. Where will your CSD form? Your CSD will form right about here. This is where your CSD will form. After your CSD has formed, then boom, you can now start trading it. For safety purposes, this trading open high low close and trading open low high close in a confirmatory manner. For safety purposes, then boom, you take it all the way to the upside. I hope you really found value in this. Like I said, please and please watch this video again and again. Again and again. Very important. Watch it again and again. Now let me show you one other lower time frame principle that I used to trade open low high close. Now this is XAUUSD, this silver. Now where is the immediate target? We already have a liquidity sweep right here. There was a raid here, so I'm expecting silver to rally all the way to $88 per ounce, right? So we already have a sweep right there. Now this becomes the immediate drawing liquidity right about here. That's the immediate drawing liquidity. Now this 4 hours time frame, all I want to be doing is open low high close all the way to this place is met. It's as simple as that. So all I need to do is wait for the 4 hours candle to form, mark it like this one before market close. That's the open, right? So oh god, these things I'm showing you, bro, I pray you know the depth of what I'm showing you. Then this is 15 minutes. Then we'll come to 15 minutes. Are you seeing? Is there a key level? Of course. So you have this breaker right here. And market has come to mitigate it. Then you have closure above. Closure above the opening price. And closure above the opening price is simply your CSD. So this is where my entry is coming from. This candle. Stop loss below the key level. And target all the way to the immediate target. The visible immediate target. Simple as ABCD. I do this almost every single day. Every single candle opening, you will see the King's Kid there. You will see me there. If it's a daily opening, you will see me there. If I miss the daily opening, I'm going to trade the 4 hours or the 1 hour all the way till the drawing liquidity is met. I will always be there. As long as there's a new candle that is opening, as long as candles exist in the chart, you will always have these opportunities. See you in the next video, guys. I really hope you found value and thank you. Please do subscribe. Very important. Do subscribe. Help us get to 2K. Thank you. See you next video.